and you know how important it is. And the real estate industry is a group of thousands of people, some wealthy, some not wealthy, most not very wealthy right now. And I will tell you, they have absolutely the most pathetic lobby in the history of the United States Congress. It is so bad. And I don't know how many of these people behind me are lobbyists, but they're not doing a very good job, I can tell you that.
I just tell the gentleman that if he would appear before the committee or several others like him, they wouldn't need lobbyists.
Thank you very much.
Thank you, gentlemen.
Thank you.
Seems to be obviously the name of the game in Washington is to have an effective lobby, and then you get the laws passed that you need to get passed for that particular industry. Mr. John Spratt.
Mr. Trump, thank you for your testimony, and in the interest of time, I'll put one question to you. Obviously, you operated at a vaster, higher scale than I did when I was involved a little bit in real estate development, but usually when we syndicated a project, what drew the participants, the limited partners, to the syndication was not just the pass-through of losses, but the fact that they could leverage their returns by writing off losses below their actual cash investment. Do you think that's a good rule and should continue?
I think it's a rule that works in terms of getting people started, and it certainly had an effect, and it can be limited to an extent if need be. But right now we don't need limits, we need action, because if there's not action, you're not going to have an industry. You're not going to have a real estate industry. And I'm really talking to a large extent, because, you know, we talk about the overbuilding done during the 80s. But I'm really talking about things that are existing, not just for new construction, but things that are existing, because you cannot get financing for any building, no matter how good it is, no matter how good your tenant is. You cannot not get financing for it under any circumstances, anybody. If it has real estate associated with it, you cannot get financing. And that's a pretty pathetic situation. Now, maybe that changes, but I think you people are going to be the ones that are going to have to make a change.
The point was, though, that when you described the syndication, you were talking about nearly an all-equity syndication, and I rarely saw an all-equity syndication. Usually the attraction was that...
I'm sorry. I didn't mean all equity. No, I meant there'd be a mortgage or there'd be a certain amount of debt, and there may be 20 or 25% of equity infusion. That's a positive thing, because you'd have a lower mortgage, you'd have, therefore, a lower interest rate on the mortgage, and you'd have 25% of no interest, for, you know, essentially interest-free equity.
But you still got to find the
thing.
Bank that makes up the other 75%.
Well, the bank could make it up, or you could have, again, it varies. I mean, you could have from 50 to almost 100%, but you could have a large amount of equity infusion, and I think that's a real positive thing. But right now, under the existing laws, you can't do that. You can't even talk to people about it because it doesn't work.
I've got developer clients who still survive. They think that this has been a shakeout, and FIT have survived. And they look back on the period from 81 to 86, and they say there were a lot of characters in the business who shouldn't have been there. They were distorting the market by doing deals that were totally tax deals. They had no economic reality. Would you agree with that assessment?
I would partially. I think there were a lot of good people in the market that got whacked, and I think that there were a lot of bad people that maybe deserved to get whacked.
Thank you very much for your testimony.
Thank you.
Thank you very much, John. Helen Bentley, please.
Thank you, Mr. Chairman. Mr. Trump, I want to thank you for being here today and for your stand on American manufacturing over the years. I was one of those with Mr. Thomas who early on as they were considering the 86 Tax Act I described it as it stinks, and I think that's the best description I can still give to it today. You've been talking about real estate here, but that Tax Act also eliminated investment tax credits.
Yes.
It eliminated interest deductions on the purchase of items. And we have a little bank in my area which just this past week has reduced by 1% the interest on anybody who wants to buy an American car. Okay? The number of phone calls that bank has had since that ad was put in has been phenomenal. And what do you think would happen to getting manufacturing going, which in turn helps with your real estate, et cetera, if we would give some inducements to investment tax credits on American manufactured products?
I think it's a truly spectacular idea.
Okay. Oh, there we are. Are you going to join me, Mr. Thomas?
I already have a bill in for
Mr.
tax
Guarini?
credits.
Okay.
So I agree with you.
Okay, very good. I need to get some of my good Republicans to agree with me on that too. But I think one of our problems has been that we've been talking about free trade far too much instead of fair trade. And as a result, we're all feeling the effects of it. And I think some of the people behind you are some of the people who have been hurt as a result of some of the pressures on free trade of exporting jobs overseas. Again, Mr. Trump, thank you for being here today, and I'd someday like to pursue some of your thoughts on the manufacturing further.
Thank you, ma'am.
Thank you, Helen. Jim Hayes?
Thank you, Mr. Trump. I want to take this opportunity to perhaps outline things in a way that might seem sophomoric, but realizing that this is an opportunity because of someone with your high profile to have people who do not deal with financial markets understand some of the dilemma we find ourselves in and some of the ways of getting out of it. Explain in very simple terms how a developer such as yourself with an idea for a project takes the cost of the project prior to 1986 and the impact of that act, takes that project cost, proposes a financing mechanism, and goes about getting investors. Just briefly outline anything, whether it's a commercial or residential real estate venture.
That's a long, it could be a pretty long answer, but just briefly, you conceive of a development in a site. It usually starts with a piece of land. You conceive of this, you go and you get your zoning, or you have your zoning. You get your architects, you get your engineers, you get your planners. You design something that you think is going to be nice and economic and all of the things that it's supposed to be. You then go out and get your financing, ideally. You used to go out and get your financing. Today you don't even think about it. You then go out and get your financing, you build your job, you hopefully have a success, and you've created a lot of jobs in between for lots of people that are buying lots of different things for the families, including other homes, et cetera, et cetera. And that's really a process, and that is the process. But that process is now circumvented because it's impossible to get financing for any development in this country, I would say, right now.
And explain to them also that at the end of the trail, when you had both an interim lender, meaning somebody who gave you a construction loan, and then a permanent lender who took that interim lender out and looked at this project over long term, that projects you did prior to 1986 that were either in a stage of an interim lender or had been completed, that even though those had been completed, even though they had been conceived under tax laws that then, depreciation that then, allowed you to make that decision to go to the bank, and that the loan was economically viable by a loan officer who looked at it, it made sense to them. Explain how, even though it was done under the previous rules, the subsequent rules were applied to you and the kind of economic impact they had for a completed transaction.
They weren't grandfathered, essentially.
Correct.
You bring up a great point, because I have never understood how this is possible. I have never understood how somebody throughout this country didn't sue the United States government and have that overturned. I mean, you had people, investors, investing over a 10-year period for under a set of conditions. And this is, as I was talking before, playing the game. We're all playing by a certain set of rules. The rules were changed for the government, but they weren't changed for us. I mean, it was an incredible circumstance that happened. And people went bust by the hundreds of thousands, and I hope you weren't one of them in terms of that, but obviously you know a lot of people that were. They changed the rules on taxes, and you have some incredible situations where people guaranteed personally a stream of payments to be paid over a 10-year period based on a stream of tax benefits for perhaps a very good job, like a low-income housing development. Nothing wrong with that, a very positive thing. And after 2 years, they got wiped out with the taxes, and yet they still owed all of this money. And many of these people, most of these people, had to declare bankruptcy. They couldn't pay it. So they personally guaranteed a stream of payments. How that wasn't grandfathered for those people, I've never understood. How it wasn't overturned by the courts, and I'm sure many people must have brought lawsuits, but I haven't heard of any successful lawsuit on it, is just beyond me, because it's probably the most unfair thing that I've seen in terms of business and government. Great point.
And another point that I'll be specific and use an office building that I'm intimately familiar with, unfortunately, but to make the point, with the change in configuration of interest deductions. There was a building in my hometown that generated $242,000 a year in rentals. It had been done through a partnership, not a leverage deal, fully collateralized, 100% occupied, not outside investors, only two partners. But because of the change in the 86 code, the building was completed prior to the 86 code. The $246,000 was treated all as personal income to the taxpayer. But the interest deduction to the insurance company that financed it was allowed only at $10,000. That's right. Whereas the actual economic activity was a slight gain of $10,000 to $12,000 between rent and debt service. But the tax impact of $240,000 with only a $10,000 deduction gave an income tax bill suddenly of $60,000 and $70,000 on an investment that made $12,000 a year. That's right. And that's what took them down. Not a dishonesty, not a corruption, not a bad planning, not a building that fell down, and not one that wasn't occupied or speculated on. And I think we need to stress that.
And they did a great job.
Precisely.
They did a beautiful job.
In planning,
they did everything right, and they got wiped out. It's
and
very
that
very
would
true.
explain your previous comment about good buildings that have tenants, but now lenders don't want them. I would suggest for two reasons, and ask if you agree. One is because of uncertainty. Since people who did good planning and fair planning got killed retroactively, they're not trusting of a government that might not, in search of revenues with a $300 billion a year budget, do something in addition, even on new buildings coming in, because the rules apply retroactively.
Absolutely correct.
And secondly, because it doesn't have a collateral value under that circumstance, since it's uncertain. And then I'm going to make 3 points, and please forgive me. One is, at no cost to taxpayers, if we do some of the things you've outlined, collateral value will be improved, but it doesn't require an injection. If a bank is carrying a building, such as the one I just described, whether it's interim or permanent, if it currently is assessed at a value of $1 million because of current tax law, if tax law were changed, that building alone might be $3 or $4 million, which on their collateral carried by the bank gives them less pressure from regulators because the asset value has been increased, but it didn't cost a taxpayer or a revenue payer 1 cent.
You might even make a profit on RTC after all. I mean, you know, the fact is, if you really wanted to do this, and you'd obviously have to do it across the board, you could probably take RTC and end up starting to make some real sales instead of giving away for 5 cents on the dollar. I mean, you're selling property for 5 cents on the dollar that's much better property than that. And if you made the proper changes in the tax law, if you made some smart changes, your RTC property could even, you wouldn't have to contribute 10 cents to it, in my opinion.
And secondly, I represent people who are being foreclosed on who've never missed a payment. That's something else I wish that people out there and at home would know. They've made every monthly payment through other income, and they were able to do so. But because the collateral value was depressed, even though they've never missed one of their bank payments, those loans are being called because the regulatory scheme is saying, well, wait a minute, this property is worth less. Therefore, we're demanding $3 or $4 million in additional collateral that they don't have. And they are being placed into either bankruptcy or they're being placed into tremendous economic adversity, having never missed one monthly or one quarterly payment.
It's a very unfair circumstance. There are a lot of, I mean, there are hundreds of thousands, and I guess beyond that, people exactly in that circumstance.
And the second point I would make is on property tax. If we do nothing in the Congress, if we keep current law, then we're just not having enough years pass where corporations and individuals are recognizing that if their properties are lower because of the change in the tax code, that they should go to their assessors and get tremendous adjustments, which once again lowers the property tax receipts of counties and parishes, in my case, states, and make them suddenly have to come up with alternative tax packages for their own revenue measures. And is that not, in New York, for example, are there not probably people who are trying to get property tax adjusted dramatically because of the impact on real estate ventures?
There are indeed. Absolutely.
And my final question would be on economic activity. I come from southwest Louisiana, which people refer to as oil and gas community. I used to hear people say constantly we were recession-proof, which I thought was an interesting phrase. I heard it here in Northern Virginia. They're suddenly, I think, finding the equal recession-proofness of the two areas. But secondly, I used to hear constantly, I'm not in the oil and gas business. Well, when it collapsed from $40 to $8 and bounced for a while, everyone that sold shoes found out they were in the oil and gas business. Everybody that sold automobiles found out they were in it. And I'm reminded of that today because I think the point you're making is that I'm not in the real estate business, and I no longer am, by the way. Don't own 1 square inch of anything.
You're lucky.
But the point is, I'm not in the real estate business, can't be said, because it is such a large segment that fuels the economy, that if you are the shop owner, if you are in medical practice, if you are an attorney, you're in the real estate business, because if your community has it collapse as mine did, it didn't just take down real estate developers, it took down everyone. 3 out of 4 of the kids who graduate this year with graduate degrees from my home university leave the state for employment. They didn't have the oil and gas industry either. They weren't realtors, but they can't stay and get a job. And my last point would be this, and then the chairman won't shoot me. For those who think it goes away cyclically, my community has been in the grips of a deep depression for 9 years.
Right.
It doesn't have a term limitation on depressions. And we had better have an affirmative action from a Congress, or I guarantee you there is no guarantee that New York City won't have 9 years or 19 years,
Absolutely.
or that we'll ever turn it around. And I would ask if you would agree with that, and then I'll be quiet and hope this time I haven't been too strident
It
for
was
my mother's
beautifully
sake.
said. I agree 100%.
Thank you very much. I appreciate your coming here also.
Thank you very much.
Gentlemen, you agree?
Yes, I thank the gentleman from Louisiana for the many suggestions that he made. Perhaps you'd be a great candidate for the Ways and Means Committee. On regard to the non-performing loans, value to loan should be changed, and many people get trapped because of the banking regulations. They're unfair and unjust. Mr. Thomas.
Just briefly, a question, Mr. Trump. We've all been wringing our hands about the RTC and the property that it has on hands and its inability to move it, taking 5 cents on the dollar. As an investor, what would your opinion be of the Congress's making those kinds of changes in the tax code, as we've indicated, passive loss, modified depreciation, and so on, and then have the RTC, rather than cherry-pick properties, simply batch them on the basis of some criteria, chronological listing or whatever, some good with the bad, and put them out there and see what would happen in terms of the market? I think you'd move a lot of property that way.
I agree. I think that you should make the changes. You shouldn't sell another property. You should make the changes and then sell the property, and you're going to get money that you wouldn't believe.
But not cherry-pick in terms of putting the
No,
best properties out, batch them, and
that
let
I
the
agree
private
with.
sector sort it out.
I would agree with what you just said, but I really think that you should stop selling property until such time as you straighten out the tax code, because those properties are being sold artificially low because of a bad tax code.
Appreciate the answer.
Thank you.
Thank you, Mr. Chairman.
Donald, the real estate industry is 20% of our GNP, employs 8 million people, and I understand, according to a statement that you filed, there is $200 billion in tax revenues that's realized nationally. And you've spoken up for a very important sector of our economy, and the sector that took the biggest hit in the tax reform of 1986. And there are a number of corrections that should be made for the sake of the growth of our economy. Otherwise, it will be too late if we don't move soon. So I want to thank you for your insights. I thank you for being here. I hope sometime soon we will have the advantage of your thoughts and your suggestions and your contributions before the Ways and Means Committee, because I think some of the tax suggestions you make have a great deal of validity to them. So
Thank you, Mr. Chairman.
So I thank you for the hour or so that you've spent with us, and I wish you well on your way back to New York.
Thank you very much. Thank you all. Thanks.
Thank you.